Welcome, ladies and gentlemen, to Commodity TV and a new interview and update interview with Vizsla Silver. You remember the famous silver developer out of Mexico. And we have Mike Pettingell here in our Swiss studios. He is the Senior Vice President of Corporate Development and Strategy. And he's also the CEO of Vizsla Royalties. Mike, welcome. Good to see you.
Thank you. Good to see you as well.
Yeah, great to have you here. Thanks for taking the time, stopping by in our studio here in Switzerland. That's great. Vizsla Silver, I'm a shareholder of the company. I have to disclose that also, of course, upfront. Congratulations what you guys have achieved. This is an outstanding job. You always had enough money. You always drilled successful. And you have what now? 350 million ounces silver in the resource?
365.
365. Sorry, I under-promised, but you over-deliver as always. I love that. Yeah, so what is going on 2025? I have the feeling that you guys are now really on high speed, towards production decision, project findings, stuff like that. Maybe you want to elaborate a bit.
Yeah, that's right. You know, it's a transformative year for us at the Panuco project, and of course with the company. We've now tipped the scales from going into an exploration company to a development company. This year is all about de-risking to make that production decision or construction decision by year end. And those three key things are, of course, advancing the permitting, advancing the project financing, and of course delivering that feasibility study, which is most crucial.
So, but when will that probably come out, the feasibility?
The feasibility study, we're targeting the second half of this year.
So we can say maybe October, November, maybe something like that?
Yeah, Q3, by the latest, let's say.
Yeah. Okay, super. I always try to get it precise. No, but that's fantastic. And because I understood you all already, like with the PEA and like pre-feas, you always did more work than you should do for that. So I have the feeling you made like a PEA plus or already in the pre-feas stadium, right?
That's right. You know, we've really tried to deliver a technical document that can serve as a blueprint to develop the mine, not as a market level study to just sell it to the highest bidder. That's not our intent at all.
Yeah, absolutely. Yeah, and I understand with Simon Smrlec is his name. I think he's a perfect mine builder, right? He did what, like 40 plus mines in his life?
Yes, that's right. Simon, he's our new chief operating officer. He joined officially in the management role, would have been mid last year. He's going to be that gentleman to take us into that next chapter. But he comes from Ausenco Engineering, where he spent the last 15 years of his career building mines all over the world, notably Silvercrest Las Chispas project.
Oh, so he knows Mexico extremely well, and Las Chispas is not so far away from you guys.
No, and it's quite an analog in terms of that mill and the processing, that they have overall their assets.
Perfect. You want to build an underground mine. I think that's also very important because we saw some, let's say, political irritations in the past about open pit mines, about permitting and stuff like this. What's the situation now with the new president, Mrs. Scheinbaum? I personally have the feeling that she's much more practical, and also the mine ministry. To me, I think things are going to the positive side, right?
Yeah, and that's exactly. We still remain cautiously optimistic, let's say. But absolutely, she seems much more practical, a lot less of that negative mining rhetoric we're hearing from her. And we've already seen permits starting to be granted, right? Alamos received a permit. Grupo Mexico received a permit so far this year.
Okay, super, perfect. Talking about permitting, because that's super important. What permits are you still missing? When do you think you really have the final permits altogether that you really can say, okay, now let's do a construction decision, which I think it will be positive, and also talk about project finance?
Yes. So there's a few permits that are still outstanding, but the big one is called the MIA, and that's the large environmental permit, right? Our advisors and consultants are highlighting about 8 to 12 months to receive an approval on that permit. And so we're very hopeful that by the time feasibility study's out, we can receive that permit and then just make that production decision.
Then we talk about project finance. I think you will be already approached, of course. Yeah, I could imagine that you have several CAs already signed.
That's right.
What is the mode? How much money do you need?
That's right. So the capex in the PEA was $224 million US. We've been quite vocal on taking about 60-40 debt to equity on that project financing. And so because the project has such high grades, we've highlighted a very rapid payback period. So we can take on more debt than, let's say a lower grade project. And so we've signed CAs with about 9 different lenders.
That's a lot.
That's right. To keep things competitive, right? Yeah. And these are all the major North American and European banks that your viewers would know very well. In fact, today, we've got a few of those underwriters on the project site doing their second round of site tours and due diligence. We're hoping to make a short list selection of who those lenders or lender could be, and hopefully we can announce that around the time of the feasibility.
Wow, that would be fantastic. Could you imagine that you do 100% debt?
Yeah, I think this project could potentially support that. But as we all know, mining is inherently risky, and you don't want to saddle too much debt and then not be able to repay that in the time frame that's appropriate if there is any risk or growing pains in starting up that project.
Okay, super. So we can say maybe 80-20 is also realistic. So still you have a little bit in the backyard.
That could be realistic.
Let's say it limits dilution. This is for me the important point.
And that is very important. Yeah. We do want to limit dilution. The management, advisors, board of directors hold about 15% of the outstanding shares of Vizsla Silver. So we're very cognizant of the dilution just as much as the shareholders and stakeholders. We have a few alternative sources of capital. We could look to fund that equity component of the financing. One being the 35% ownership Vizsla Silver has in Vizsla Royalties, you mentioned. Another one is an ATM, a US denominated ATM we have in place. We've got about $85 million left on that. These are ways to be strategic and not just attach the market for a discounted equity raise.
Super. So that means let's say you present to an institution, they say, hey, you know what, we love to have $10 million invested. You can use the ATM for that maybe.
That's right.
Because I think that's very clever.
And it's a very tight discount, if not at all. That's why ATM stands for at the market.
Exactly. And your stock is very liquid.
That's right. We're doing about 2.7 million shares traded daily on both the NYSE American and the Toronto Stock Exchange.
Okay, super. Then very important, at what gold and silver price assumptions was your PEA now done? First thing. Second thing is, what are the AIC you have projected already?
Yes. So the commodity price assumptions, although deemed quite high at the time, 26 silver, 1975 gold. They were CIBC's long-term price assumptions at the time.
Yeah, it's so conservative in today's life.
Well, that's right. I mean, at spot today at around 32, 33 silver, $2,800, $2,900 gold, the project economics that were highlighted in the PEA, we're into triple-digit IRR territory at those numbers, right? So it's looking very positive as we head into this feasibility study. And of course, once we're in production, what that could generate in terms of revenue.
Super. So that means you would have a payback period, I would assume, well below 12 months, if I
The PEA highlighted over $250 million in after-tax free cash flow for years 1 and 2. With a capital outlay of about $224 million.
That's done.
It's highlighting about 9 months.
Super. And can you structure a debt deal like that? Because I could imagine they want to have maybe a higher interest rate, which doesn't matter at those prices. But can you pay then really immediately back? Because I could imagine they want to see at least a 12 to 24 months run rate.
They'll want to see 3+ years typically, and that's an area, of course, that we want to reduce the repayment penalty. And we have that ability, right? Super. Given the low capital hurdle and given the rapid payback and high grade nature of this asset.
Okay, super. What is the initial mine life and what is, let's say, your personal expectation? Because you are also a geologist, What do you think this could go to? Because when I go through your presentation, I see that all. What you have found so far, what strike lengths you still have, what drill results you have. To me, it looks like this could be easily like 30, 40 years.
Yes, absolutely. And I think, the open-ended nature of every structure that we have in our resource base really supports that. We've drilled 400,000 meters at this property. We have not closed off any single vein, open along strike and open at depth. And again, 365 million ounces in just a small postage stamp of our project, right?
Crazy. So that could easily go up to 500 million, $1 billion. We don't know.
Well, it's an 11-year mine life in the PEA.
Yeah.
The reality is when we publish these economic studies, when you go beyond a 14-year mine life, those present values of those years, they get eroded to nothing. Frankly.
So it makes no sense.
And so the only groups, and I've said this before, the only groups interested in seeing a 30-year mine life, which we could show, are the corporate counterparties that would like to take us over.
Of course, yeah. Take over, that's also a nice buzzword here, I would call it. How well are you protected? I think management has a nice chunk of the
That's right.
of the shares. That's important. Also some other institutions. So are you all, let's say, aligned not to sell too cheap too early?
Yeah, if you speak to our founder, CEO, our chairman of the board, we are not prioritizing a sale. And as mentioned previously, the documents that we've published so far, including that PEA, it's above and beyond what's typical because we are intending to build, develop, and of course, produce from this asset. We see this as a long-lived, multi-generational asset, similar to some of those billion-ounce districts in the silver space.
Then, of course, the other important question is, we said what it costs, what AIC you have so far. That's around the $10 mark, I would call it.
Right.
Then, of course, important is how is the infrastructure set up? Because I saw you have a highway, you have high voltage power lines. It looks like to me this is the perfect recipe with the perfect ingredients for a successful mine.
Simon Smirlik, our COO, he says it's like developing a warehouse in an industrial complex. It's meant to be.
Yeah.
The discoveries date all the way back to the conquistadors 450 plus years ago. And it's very well endowed with infrastructure. Because of that previous mining history, most of the areas are brownfields in nature. That's excellent when you come to permit for a project. It really shortens those timelines. And governments and regulatory bodies really like that because you're, as a company, taking on an environmental liability. You will leave it far superior. But we've got an hour drive from a major city center with a million plus people.
Perfect.
We've got rail. We've got deep sea ports, but we're doing doré, not concentrate, so that's a bit less important there. We've got high tension power lines, as you mentioned, that run right over the top of our proposed plant site.
Fantastic. Yeah, I think those doré bars make also the shipment much more safe, right?
It adds a little bit on insurance, of course, but it's a fly out, right? So we're still at that stage of determining how we'll ship those doré bars, the gold and the silver bars, off the site, but very likely in helicopter.
You ship them to us, to Switzerland, or how does it work?
Who's the highest? Who's paying the most?
Of course. Fantastic. Great. Yeah. So for this year, I think how many meters you want to drill still this year? Then you finish the feasibility study, of course, project finance, construction decisions. So that's going to be a big year.
Yeah, it's a big year. As mentioned, it's a transformative year. It's really turning the company into a developer and then ultimately getting into it being construction to be producing first silver in the second half of 2027. That is our goal.
Perfect.
As far as drilling goes, we're not prioritizing exploration as much because we want to get to cash flow. Once you're into cash flow, you can really start exploring the rest of our vastly underexplored disk. You have to remember, we've got 93 kilometers of known sampled vein strike. The PEA and the economics that you'll see in the feasibility represents about 8% of that.
Oops.
So we'll drill 37,000 meters budgeted this year. 10 of those are focused on pure discovery in the eastern part of our district.
Wow.
And the remainder is really focused on expanding and extending the known mineralization that could potentially complement the next mine plan.
Yeah, and once you are in production, you can drill from underground, which makes it faster and cheaper, of course.
Yeah, and more efficient at targeting.
Because you see where to go.
And the fabric of the rock doesn't pull the drills. So you can absolutely target much cheaper, shorter drill holes, quicker turnaround. It's far, far better.
Super. Then last question, most important question, what is cash in the bank? Are you financed to do that all until it comes to the project finance? Because we saw in the past projects, let's say on the last 100 meters, on kilometer 42.1, I would call it, from the marathon, all of a sudden, the money is gone. We need to finance. Stress. And projects got busted.
Yeah, we're in a really good way in terms of our balance sheet. We've got 90 million US currently in the bank. Zero debt. That cash will cover us all the way through the operational objectives, including a bulk sample test mine that we're fully funded and fully permitted for. That's actually already initiated. We'll get down to the mineralization through that. Those results should feed into the FS, and then we're at project financing. So it'll take us all the way to when we need to raise that capital for the project.
Fantastic. And you said 2027 you want to be in production, so that means like a construction time of what, 1.5 years, 20 months?
Roughly 16, 18
like
months.
That. Okay, super. So that's also, I would say, manageable.
Absolutely. And when you've got a mine builder who's built over 42 mines in his 30-year career, including one just up the road a few years ago, you're in very good hands.
I would think so too. We are in very good hands with you and the management. Thank you very much. I'm a happy shareholder, made a lot of money so far, and I think we will do much, much more. We wish you well, really a lot of that, because bring that thing in production. The silver market needs your ounces.
I agree. Definitely. I agree. Thank you. It's always a pleasure.
Thank you very much. Pleasure for me. Yeah, ladies and gentlemen, that was Mike Pettingell, the Senior Vice President, Corporate Development and Strategy of Vizsla Silver. This is, the next silver producer from underground mine here in Mexico. And we talk about here 21 million ounces in production by 2027, which is great. 365 million ounces so far in the resources. We talk about $224 million of CapEx planned. Don't forget, there's also nice contingency in it. And we talk about, AISC below $10 so far, even if that would go to 11 or 12. Honestly, who cares with those silver prices? And this is a cash machine. They can do the payback below 1 year, which is outstanding. Not many projects can do that. And don't forget, this silver market is entering this year the 7th year of the deficit. The market needs those 20 million ounces desperately. And still we talk about a deficit of 250 to 300 million ounces also for this year. We saw the last 6 years, 1.1 billion ounces cumulated already. And to be honest, the silver demand is growing still. So this is a perfect storm, a perfect market. Watch the 28th February when it comes to the silver deliveries for COMEX. There might be a little surprise for those guys who try to depress the silver market. And I'm extremely bullish on that. Our chart analysis says Vizsla Silver, next target 450, 550 in the short term. Longer term, meaning for probably this year, 2027, it can easily go to $7.50 to $10. And when this wonderful company is in production and bringing the cash in, like we described just, I think a $15 price target would be by 2028 realistic. So thanks for watching us. Make sure you own that wonderful company. Make your due diligence. I wish you all well. Thanks and bye-bye from Switzerland.